As digital finance rapidly develops, CBDC has emerged as a popular method of currency. CBDC, which stands for Central Bank Digital Currency, differs from normal cryptocurrencies as it is issued by a country's central bank and is backed by the credit of the issuing institution. It serves as a digital representation of traditional cash. CBDC can be categorized into two main types: retail CBDC and wholesale CBDC. Retail CBDC is intended for the general public and can be used for daily transactions, offering a lower cost and more convenient alternative to traditional currency. It enables the public to make payments, transfers, and other financial transactions efficiently. Wholesale CBDC, on the other hand, is designed for financial institutions to facilitate transactions between banks and other financial entities. It enhances efficiency within the financial system. In recent years, CBDC has gained significant attention. According to research conducted by the Atlantic Council, the number of countries and currency unions exploring CBDC increased from 74 in April 2021 to 135 by June 2023. More and more countries are investing resources in CBDC projects, with some already in the pilot stage or having launched their own CBDCs. Let's explore how governments around the world are approaching CBDC implementation. China stands out as a frontrunner in technology and the development of domestic payment networks through digital currencies. China has initiated its own digital currency project, called e-CNY. Starting in 2019, China began piloting e-CNY as a retail CBDC issued to the public. As of June 2021, the People's Bank of China reported that over 20.87 million personal wallets and 3.51 million corporate wallets had been opened, with a transaction volume of 70.75 million and a transaction value of approximately 34.5 billion renminbi. For China, e-CNY is improving the efficiency of central bank payment systems and providing a convenient retail payment method for the general public. The benefits of CBDC have made it not only favored by top economies and well-developed countries, but also by relatively less advanced nations. The Bahamas, for example, became the first nation to launch its own digital currency in 2020, called Sand Dollar. CBDC offers the Bahamas the potential to improve financial inclusion, as the country may lack physical infrastructure to support daily transactions, such as banks or ATMs. Additionally, there is a certain number of unbanked and underbanked individuals across the country who do not have access to basic banking services. CBDC provides a simple and direct payment method with a low threshold standard, lower remittance transfer costs, potentially replacing traditional currency. From a government perspective, CBDC can not only enhance security by being traceable and transparent to prevent money laundering, but also reduce the cost of printing physical money. Furthermore, many countries are exploring the development of cross-border wholesale CBDC projects. Singapore has emerged as a leader in cross-border CBDC testing. In recent years, Singapore has collaborated with various countries on projects such as Project Mariana, Jasper, Dunbar, and more. These initiatives create new opportunities in cross-border payments and foreign exchange, offering virtually instant settlement, reduced transaction costs. In contrast, the United States seems to be facing challenges and lagging behind other countries in CBDC development. As the world's leading economic power, the United States is still in the developmental stage of CBDC. One reason for this is concerns among the public that the U.S. government may track user activity through CBDC. CBDCs require a complex regulatory framework that includes privacy protection, consumer safeguards, and anti-money laundering standards. If the United States fails to establish comprehensive standards to protect the privacy of CBDC users and address public concerns, the development of CBDC in the country may have no end in sight. As stated by Jerome Powell, chairman of the Federal Reserve, during the semi-annual monetary policy report to Congress, the U.S. Federal Reserve is currently nowhere near recommending, let alone adopting, a central bank digital currency. In conclusion, as digital finance continues to advance, CBDC has gained significant attention globally. Governments around the world are taking diverse approaches to CBDC implementation, with some countries leading the way while others face challenges or seek to leverage CBDC for financial inclusion and cost reduction.